Hey guys, welcome back to the channel. In this video, I'm going to share my big portfolio update and explain what my moves are ahead. But before I get into the video, please smash that like button for the algorithm gods, know that I'm here, and hit subscribe if you're new so you know whenever I go live where I talk about finance, news, stocks, and investing, or I publish a new video like the one you're watching. With that out of the way, guys, let's get into the video. All right, so we had a huge problem. Okay, I have what you call split brain portfolio, okay, or at least that's what I'm calling it. So I had two portfolios, as some of you might know. I had one on M1 Finance and one on Robinhood. Okay, Robinhood is where I kept all of the high yield ETFs, and then M1 Finance is where I kept kind of my more older portfolio, right? The REITs, an index, a little bit of crypto, and then some BDCs. Now the problem arose whenever I got paid, right, or any type of money. It would go obviously to the bank, but I had to make a decision. Does it go to my M1 Finance portfolio or does it go to the high yield ETFs, right? In order to make purchases. Now, both portfolios have, different obviously holdings. And the problem with that is I have to choose and look through my holdings and see which ones I want to purchase, right? This just created a problem. You have transaction costs, you have time delays, you have all kinds of problems. Okay. And not only that, both of these portfolios were kind of living in their own unique ecosystems, right? Whenever there was dividends produced, I could only use those dividends to purchase either more high yield ETFs, or if the core portfolio produced any type of dividends, I can only invest in REITs, BDCs, or more into the index or even a little bit of crypto, right? So this was a problem because there was no mechanism to transfer funds between these two brokerages unless I went back to the bank. Okay. And going back to the bank, this would cause time delays. I'd probably miss my opportunities, right? Because high yield ETFs, they produce a lot of income. And, if I wanted to take advantage of maybe some REITs dropping in value or maybe some crypto BDCs or index funds, I couldn't. So this was just, again, a split brain portfolio. This was causing problems. And there is no mechanism between Robinhood and M1 Finance to transfer money. So again, this just presented another problem. So what I decided to do is merge my portfolio from M1 Finance to Robinhood. Now, don't get it twisted. I love M1 Finance, okay? I'm a huge fan of M1 Finance. I really like the platform. I think it fits most long-term investors who fit that kind of profile, that buy and hold long-term passive type of investor. The only drawbacks that I had with M1 Finance were that, one, it doesn't have all of the funds or mostly the funds that Robinhood does. And that's for good reason. M1 Finance, they choose quality over quantity. They don't want the riskier, assets in their funds, but you can request to add these funds and they'll review it. And if it fits, then they'll add it, right? So M1 Finance, again, is not bad. I love the features that it has, but it's just Robinhood had features that I needed, especially for now, since I'm in a different kind of phase of life. Okay. So Robinhood obviously has a lower interest rate where I think I was paying six and a quarter, which actually they bumped up to 6.4% for my interest rate because I use margin on M1 Finance. Robinhood, they have me at 5.25, right? So I'm getting a full basis point lower. I have access to more products, more just a feature or two. Basically, is the usage of margin. So Robinhood, again, decided just to move my portfolio to Robinhood. I still have nothing against M1 Finance. It's still a great platform. Anyways, I sound like I'm, advertising for M1 Finance, but I have to make that clear. All right. There is nothing wrong with that brokerage firm. All right. So let's get into Robinhood and let's talk about the big portfolio move and the big migration. So you guys might already know that this was the previous portfolio. And I say previous because I already made some changes. All right. So I had just a little bit of crypto, nothing there, right? My crypto strategy, I didn't really have one. It was just buy and hold IBIT. I didn't want to deal with, keys. I didn't want to deal with hot storage, cold storage. I didn't want to deal with hardware wallets. I didn't want to deal with passphrases, keys, all that garbage, right? I just did not want to deal with it. I just want to simply buy something and call it a day. Now, I know there's probably some hardcore Bitcoiners that'll look at that and just, absolutely probably have a vein popping in their head. But hey, it is what it is for me anyways. I just didn't want to deal with any of it. So I decided to just go with IBIT, but there was no real strategy behind this, right? Behind my crypto or crypto allocation, Bitcoin allocation, right? For REITs, I'm still going to hold REITs. I'm a big believer in real estate. And not only that, it helps add to the diversification of this portfolio, that I'm not heavily weighted in something. So I'm going to hold them. I actually got rid of the BDCs, the business development companies. The reason being is because when interest rates drop, I believe BDCs will have some pressure put on them, especially as banks are continued to go through this deregulation phase, and it makes it easier for smaller companies to get loans. Again, we're heading into an economic expansion, in my opinion. All right, my thesis is that we're heading into economic expansion, and BDCs may not be needed as much, because companies will be able to get the loans from other banks, other regional banks, etc. So I think credit funds and BDCs will probably lose their pizzazz that they had over the tightening cycle, where the Federal Reserve was hiking interest rates. But we'll see. We will see. All right. Scott Besson did mention that he wants to work on deregulating that whole space. So we will see what happens. Now, I'm going to keep the high yield stuff. All right. Again, BDCs, they usually provided a lot higher yields than REITs typically. But with high yield investments, like XDTE, XPay, PLTW, NVDW, I don't really need the BDCs as well. So I'm going to keep investing in the high yield space. I really do like this space. It's really interesting. So I'm going to keep investing in there. All right. Now, very high risk portfolio. All right, guys, you guys know this. I use 100% leverage in my portfolio. This is a very high risk portfolio. So let's talk about the actual changes made to this portfolio. Okay, so I'm going to make a video, because I know a lot of people are going to be interested, about the Bitcoin strategy and the Treasuries. Why am I adding these two? And their allocations suddenly just spiked. Okay, so I will be making a full video about this, and one for the Treasuries, because this is actually really, really important, especially for the Treasuries. With so much uncertainty still out there, and the possibility of this portfolio going down or experiencing another drawdown, like we saw during Liberation Day, where the tariffs were turned on, and then we hit a 90-day pause. We saw the stock market drop almost 30%, a little over 30% actually. So keeping that in mind, adding Treasuries can help buffer that. But again, I will explain that in a whole other video. And then we have the high yield. Of course, I'm going to keep that. And then I am still going to continue to invest in an index following a tech sector growth focused ETF. For me, it's VGT from Vanguard. And then I'm going to continue holding REITs. All right. So nothing is going to change there. Again, I still plan to use 100% leverage or 100% margin. I do not recommend anyone use margin. Let me be clear about this. Do not use margin, all right, unless you really understand what you're doing and the risks inherent with using margin, all right, because this can backfire a lot. Yes, it makes your portfolio a little more frothy. Yes, you can increase your returns much quicker, but you can also destroy your portfolio and destroy your wealth. So you have to treat margin like it's a loaded gun and be exceptionally careful and responsible with how you use this. All right. So with that, let's talk about the actual portfolio and some of the benefits now. All right. Now that I made this move, and I'm going to show you the portfolio here in a second. Now that I actually made the move, I have this cash flow strategy. I don't care what you call this. All right. This is nothing new. All right. This is just a simple drip, right? That's all you can really call it. But having this portfolio now all centralized in a single brokerage, there's some benefits, right? I can continue to drip where, I can drip, dividend reinvestment plan or just reinvest the dividends back into the high yield ETFs or the REITs. This is a huge benefit because I couldn't before because I would have to move money to and from, and it's just, it was extremely inefficient. And not only that, I can use the money that's produced from these high yield income ETFs or even these REITs. I can use that for targeted buys, for tactical allocations. If I want to buy a new holding or buy a new security when there's a dip, I can absolutely do that now. I'll have, a lot more money to be able to do that. Same thing with, if, there's a dip from the high yield ETFs or the REITs, I can take advantage of that. Or maybe I open a new position, okay? Open a new position in something that I'm looking at. Again, this just adds kind of like a tactical, aspect to this whole investing thing. All right, to this whole portfolio. Now, I am, again, following this crypto strategy. You guys can Google this and spend some time on YouTube if you'd like. This is pretty much what it's called. As far as I found, if you guys want to get ahead of me, absolutely be my guest. But that is essentially what I'm going to be doing. And I can use not only what's in here, but also what's in here and what's in here to grow that crypto strategy, right? To focus on that crypto strategy, right? Or if I want, I could take the payouts. If I need additional cash to live on, or if I need, money to pay a bill or whatever, or take a vacation, I have that optionality. So this is why I like having everything completely centralized now. It just makes life so much easier. All right, so now that you guys understand the system, understand the portfolio migration and the reasons why, let's just look at the portfolio as it is today. All right, so I got to minimize all this. Let's go to the Robinhood portfolio. So here is the portfolio. All right, you guys usually just saw PLTW, NVDW, Chippy, ONDS, XPay, and XDTE. But if I scroll down, you guys can see all of my other holdings. All right. Most of these are REITs, real estate investment trusts. And then I think there's the IBIT ETF in here somewhere, as well as, one or two other random stocks. All right. So this is the full portfolio. All right. I have $62,000 in buying power. I've already made a huge purchase, and I'm going to make another huge purchase. So I made a few purchases already. But again, I will be going over those probably in a different video. Okay. So again, using a lot of margin. All right. This would be enough to scare a lot of people, and those people would be absolutely right to be scared, because again, this can go sideways. This can go bad really, really fast. The only reason why I'm so comfortable with margin is because I've used margin before in another life, right? I've used, I come from basically the real estate space. So, I've had multiple mortgages all at once. I think, somewhere in probably like $500,000 worth of mortgages. So again, I'm just accustomed to having debt, in order to grow wealth or in order to invest with. So this is nothing new to me. I'm just very comfortable with it. However, I will put the asterisk there that, a house going down 30 or 40% in value overnight is not possible, right? Not possible with real estate. It is absolutely possible with stocks, right? With investing in the stock market. So this is the big difference between the two, but the psychology, in my opinion, remains the same, but you have to take a way more active approach to your investing when you're using margin, because you have to keep on top of everything. So this is the portfolio as it is. Again, I'm holding about $62,000 worth of buying power because I still have to complete some of my buys, but I've already deployed $253,000 worth of margin into this portfolio. All right. So this is the big migration. All right. This is the big portfolio move. And I know some people might be asking again about those other strategies. What are those going to be? Again, I will be making a full video on all of this a little later. Do not copy my trades. Do not copy this portfolio. This is a very high risk portfolio. I understand it because it's mine. I built it, right? It's just, I want you guys to really understand that, to be very careful with using margin. There's a lot of YouTube videos out there that just talk about how great using margin is, all the great dividend income people make, but we tend to forget history. And it wasn't that long ago where we had a black swan event, i.e. Liberation Day, where portfolios dropped well over 30%, especially people in the high yield space. We saw, portfolios getting margin called left and right, heading into account deficits, and it seemed like we were about to head lower. This would have absolutely destroyed people's wealth and people's portfolios. So again, be very cautious with how you use or implement margin. All right. I cannot say that enough. Anyways, guys, that'll do it for this portfolio update. I have a couple more videos coming out, so keep an eye out for this one. I don't want to release them all at once, but this next one I'm going to release, you definitely will want to watch before July 4th. Okay. This one will be a big one. All right. And I'll be releasing that one right after this video. All right, guys, take care. Thanks for watching.